Sandeep Tandon joins us now. Let's connect with him to talk about markets and which way he feels markets are moving. Sandeep, I was just scanning through some of your notes and the kind of outperformance your schemes have done. You managed to beat the benchmark quite handsomely. So what is the strategy in place now to make sure that the returns what you've given to your investors, those are here to stay?
So as we always talk about that, we are very macro-centric thing. So we keep on assessing macro environment, okay, and keep on rebalancing our portfolio based on the risk profiling of various asset classes which we look at. And the current environment is also very tricky. If you really ask me in last 3 months, particularly May, June, July, the 3 months, we have seen a very extraordinary liquidity which got pumped by various central banks. I think that easy phase of liquidity is getting over. Okay, so we'll remain elevated from the liquidity in absolute number terms, but in terms of momentum of liquidity started declining. So we are entering into again an inflection point. Okay, where market can correct a bit from this level. All the asset classes which have seen one big momentum can correct. Whether you talk about gold is showcasing a massive sign of euphoria. From a longer term perspective, we are extremely bullish. But from a near-term perspective, our quant complacency data is coming closer to a bottom sort of thing, which means indicate that gold has also a correction, has a potential to correct from these level. Crude has potential to spike. And DXY has become a very consensus rate is going to collapse. I think long term we are very bearish on the dollar index, but from a very near-term perspective, I think it's reaching an inflection point, which has potential to reverse from these levels. So we are a very classic background is there where things can reverse a bit. So easy phase, which I talked about, is getting over. We are getting into a difficult phase of liquidity. So you have to rebalance your risk in your portfolio in such a manner that you are adjusted to such volatile environment. That's the way we like to play along.
Sure. Sandeep, and how is it that you do that? I mean, yesterday you got a little bit of scare when you saw the private banking names, Reliance, which have really shown leadership all of the last 3 months, and, banks as well have participated. They took a bit of a step back. While pharma continues to hold out, select IT and autos made a comeback. Do you need to make that tactical shift, Sandeep, when it comes to equity sectors as well? Do you now need to ease off a little bit from Reliance or banks at all?
So without getting into specific names, if we can talk about sectors, okay. See, the way we look at, we have been very bullish from pharma right from September 2019. And we call it, this is the structure bull run in pharma, which is unfolding. And we are extremely bearish on the banking and financial as a theme, okay. And this theme has potential to outperform maybe for next 3 years. So it's not a 1 quarter or 2 quarter potential, but keep in mind that nothing will happen very linear move, Post March fall, we have seen a massive move coming in consumption names and pharma names, and then pharma stocks corrected because too much hype got built and everybody was anticipating that second quarter number may not be, or rather first quarter for this year may not be that great. Okay, but fortunately, most of the company which has been reported number in pharma space has done extremely well. So I think it's a trend which you have to spot based on multiple parameters which we track. So our thesis is that long pharma and underweight financial is a theme which can last for long. So it's not a theme for 1 quarter or 2, okay? But in between you will get these spikes like right from May, June market corrected very sharply, particularly April, May on banking corrected a lot. And last 2 months or 1.5 months in particularly bank has rallied, okay? So you will get these sort of up moves in these sector. But from a longer term perspective, and I say longer term over 3 years perspective, we remain very cautious in this space.
Sure. Is the telecom story, Sandeep, though intact, Bharti's, Reliance's, or do you think much of the easy money has been made there as well?
So I think similar thing I will say when you have seen extraordinary liquidity and grossly under ownership in this space, particularly Reliance people who are grossly under owned, I think that has played out quite well. Okay. Now we are reaching a stage where it is significantly large weightage in the index and people are compelled to participate. So that sort of phase we are entering right now. And this is something in some manner we call it, it's marginal euphoric. So I will not call it this is the top for the sector as a whole. I don't think any signs are there. But from a very near-term perspective, this is a potential. The telecom also sector also has a potential to consolidate. If I am not going to say a deep correction, but a small correction and consolidation could be a better terminology for me for a few more months before it takes the next level up move.
Okay. Sandeep, I want to talk about some of the risks that you say perhaps haven't necessarily been factored in. Let's talk about even, for example, crude prices, the depreciation of the rupee. Some of these will affect, of course, different sectors differently. But crude in particular, what makes you feel that we will see that rise in prices, or a substantial one that deserves a mention? Because until now, there seems to be no trigger for it. What's the kind of outlook you have on that front?
So the best correlation of crude is with the geopolitical wars. Okay, so we have been talking about the 2020. You will remember as a starting point of extraordinary employed wars across asset classes, and we have seen that trend working so well so far. Given the background which we are there, the overall volatility of various asset class has been remain very elevated. Now we are seeing, after a smooth correction, or the correction which we have seen in last 2 months or 3 months or so, is reaching an inflection point. So we expect the geopolitical volatility will spike further, and the first casualty will be on crude. Okay, from a near-term perspective. So we are slightly cautious. I'm not saying that crude is going to run away and you talking about big move. Okay, but the complacency which is there. So if you ask me, market has become very, very complacent because of this extraordinary liquidity reasons. Everybody is very confident about the gold, silver, or the crude will remain, and commodity prices remain suppressed. Inflation remains suppressed. I don't think that is the case. So given the environment which we are looking at, I think from the current level, there's a high probability that geopolitical volatility is actually expanding, which has its own impact on crude. Okay, and then I'm also linking with the other parameter like reversal of DXY from a near-term perspective. Okay, we have been bearish. We have talked about the 2019-20. You remember as a top for DXY from a longer-term perspective. Our view is there that DXY has potential to correct between 25 to 35% over next 3 years. Okay, that does not mean that you will not see in-between spikes. So we have seen a very classic move from 103 level. It collapsed nearly 93 level, which is substantial fall. So from these level, if I expect revival happening in DXY, it has its own impact on the commodities market in a big way. And so is the case. It has its own psychological impact on the currency also. So, and India is obviously more vulnerable on the crude front as well as on the DXY front.
Okay, fair enough. That's a good sense of the setup there. In light of that, then, what are some of the other overweights you're currently looking at, or based on other factors? I know that chemicals is definitely an area that you've been very positive on.
So I think the entire chemical basket, whether it's both organic and inorganic chemicals, we remain very constructive in the space from a very longer term perspective. What we call these structural bull market stories, which is just unfolded. Okay, it's a very, very early stages. Okay, of this up move which we are talking about, and given the background, people are worried about China, and most of the global firms wants to outsource a lot of stuff from India, and Indian chemical companies are completely geared up for that. Okay, it's a very scalable business which some of the Indian entrepreneurs have built. So we remain very constructive for this space, but that does not mean everything will be very linear. Okay, we always talk about we are living in a high volatile environment, so you will get multiple opportunity to prune your exposure or increase your exposure depending on the environment which you are in right now. I think that's the best way to play this market.
Sandeep Tandon, the broker or strategist, has to give advice now to the Sandeep Tandon fund manager and the CIO on one idea which is wrong with Quantum Mutual Fund. What would you advise?
Can you, Nikun, repeat the question?
My question is that if Sandeep Tandon in his previous avatar as a strategist and as a broker has to advise Sandeep Tandon in his new avatar, the CIO and the fund manager, that which is one position which needs to be changed in quantum mutual fund, and you should not stick to that quant mutual fund, and you should not stick to it because of your compulsions of beating the benchmark. What would be that position?
So in our previous avatar as a advisor to other houses and as an analyst also, we tend to get carried away with our view. Whenever we become successful, okay, or our calls are right, we tend to have very skewed outlook on certain exposure or certain positions or certain views. Okay, I think that is very vital. That if you ask me in last 30 years, what I have learned in last 30 years and what we are trying to implement in our money management business is to remove these human biases. Okay, and that is a very, very vital decision because we all are emotionally weak people. We tend to get affected in a big way. We like our position, we like our ideas. Okay, so that biases we have to remove, and that's the reason why we have built our VLTR framework, where we give a lot of weightage to the sentiments data. So we have tried to create a perception analytics on sectors and stocks. We have tried to build a sentiment analytics on stocks and sector and even various asset classes. So idea is that when you have a rational thinking, you can build these models, and this can be very useful when there is uncertainty and there's a turmoil going on. Then you can implement these things. This is one of the reasons we have been relatively more successful in last few months, where whole world was actually affected because people were not prepared for this environment, and where we were prepared for this environment because we were saying that this is going to be an extreme volatile environment which can last till 2023. So the basic thing is that how to remove your biases from the system. That is the one advice I like to give to myself.
Sandeep, at what point in time do you think markets would like to revisit low PE, high dividend yield stocks? Because there is a phase in the market, Sandeep, when these stocks will do well. That phase is right now not at play. But at some point in time, I'm sure investors would say, rather than buying a DMart at a ridiculous P of 70 plus or owning Nestle at a P multiple of 50 plus, one is better off owning a BEL or ITC, which are cheap and which give great dividend yields.
So Nikunj, the way I think that trend has already started. Okay, it's not very visible right now. It's a very early signs of the trend that growth and value investment is coming back. People have started recognizing these things as compared to whatever we have seen in US markets. I think it's also very important the day US market peaks out. Okay, this trend will gather momentum. So all the growth story which we are talking about on NASDAQ. By the way, NASDAQ, our euphoria index of NASDAQ is also now very close or similar to what happened in 2000 levels. So it is also a sign that US market is also closer to a top. I'm talking about even NASDAQ has a potential. It is giving you signs of peaking out. So your liquidity is at significantly high level. Valuations are also stretched, and risk appetite is also equally high. So it's a very classic sign where these high momentum stocks, and NASDAQ is one index which represent that space quite well. So it's a clear indication the day you see NASDAQ has started correcting a lot, then you will see the visibility in these value stocks coming back. And it's not only India, it will be a global phenomenon.
Okay, let's take a very quick break. Sandeep, great chatting with you this morning. Thank you so much for joining us and taking us through your perspective on things as they stand. Okay, we'll take a quick break. Back in a moment.